Chief Investment Officer at Plamen Monovski. Thank you very much for coming in to speak to us. So, why are you investing heavily in Central Europe right now?
Precisely for the reason that you said. It's still undiscovered, and despite 10 years of convergence, pension funds and investors are underinvested in it. It also presents the deepest discount versus emerging markets. It's a 10-year high. And historically, when the region has been at this discount, it has rallied and outperformed. It's a great time to launch a product.
If there are big returns to be had, as you say, cheap companies with strong earnings growth, why then is it still a largely untapped market?
I think the problems of Europe itself and the periphery of Europe has somewhat changed the perception of the region. And in the region, there are some economies that are struggling, like the Baltics and the Balkans. But the large countries there, Russia, Turkey, Poland, are doing exceptionally well. And I think investors are about to discover that.
And which specific types of industries, companies are we talking about here? Where do the best opportunities lie?
The best opportunities now would be in the next stage of the development cycle. I would say infrastructure and the building of new industries, insurances and industries geared to the serving of the consumer. The consumer in the region is very large. It's about 400 million people, and they are much more affluent than elsewhere in emerging markets.
When you talk about emerging Europe, many investors may think of the troubled economies of Latvia and Hungary, and perhaps they're not so keen.
Well, to that we will point the economies that are doing very well. Turkey, which is a 7% grower. Russia, which is going through very strong recovery and has got one of the strongest balance sheets in the world. And of course, Poland. It's the only country that grew in the recession in Europe. It grew by 1.9%, and it's got a phenomenal environment for new businesses and low taxes.
Nevertheless, we are seeing concerns about the European debt crisis resurfacing now, certainly impacting on bond markets, equity markets. How will that play out in Central Europe?
I think now investors have become a bit more sophisticated, and they understand that certain countries haven't managed themselves well, but others have managed themselves very well, and they're making the differentiation. The Central European countries in which we would also invest a gear play on Germany, and as we know, Germany has done very well, and it's a geared play on China and the development of emerging markets.
So you think that Germany's, the kind of growth that Germany has enjoyed will continue? And I suppose that the countries that you're investing in, their economic fate will be contingent on Germany doing well.
The ones in Central Europe very much are, and I believe Germany is likely to continue to do well as emerging markets and the rest of the world recover further.
Plamen Monovski, Chief Investment Officer for Renaissance Asset Managers. Great to have you. Thanks for coming in.